Deepak Shenoy is joining us now. Deepak, afternoon to you. The kind of profit taking which is setting in the PSU banks, are you having any names on your radar which, if they come down to your level, you'll start nibbling in?
Yeah, I think to be honest, I think the problem right now is they're going down from very unreasonable valuations in some cases, but there are some banks within the pack, especially in PSUs, where I think there is opportunity. Indian Bank, for instance, has generally demonstrated even before the mergers. It had demonstrated a recovery that was kind of peculiar even among public sector banks. So I think that would be an interesting buy because I think they've managed to clean up a lot before a lot more than some of the other banks, and in comparison, they have a better growth trajectory. Uh, uh, SBI is always interesting because it's the most aggressive of the lot in terms of market share, in terms of certain penetration, specifically home loans, where I think RBI is also pushing banks to increase market share in compared to personal loans. But I think there's a headwind there because SBI did a lot of unsecured lending as well. But therefore, of the public sector bank, Indian Bank looks better. We have a bunch of private banks in our portfolio, so a little bias there.
Deepak, are you using this dip to buy in some of those brokerage names and the stock market ancillaries? Because time and again, they've managed to kind of, reimagine themselves in that sense or find a way out to all of these SEBI regulations, etc. Would you be buying the dip at all on the likes of Angel, Motilal Oswal, Geojit of the world?
Yeah, the dip has come, I think, on the back of this particular news, which is, I think, fair because you should be true to value. If somebody says the NSE fee is X, then NSE fee should have been X. It should not be that the broker gets a volume discount and therefore is able to charge is pay less than that X to the NSE. In effect, the broker could increase the brokerage instead if they want the same volume from the customer. And that, of course, has other commercial issues because then competition comes into play. But more importantly, I think, there are cross marketplace players that are not just brokerages, like Motilal, for instance, which may be attractive because they have the diversification in that part of the business. And they're anyway generally not very big on the options trade in comparison with perhaps players like Angel or some of the others. So that might still be an interesting play. We have some investments in Motilal and BSC and CDSL. I think BSC and CDSL will also benefit because as an exchange, they used to earn lower fees from the largest transacted players. Now the average fee that they will have to go to after October will be possibly to their advantage. It won't be to their disadvantage compared to what it was earlier. So I think they will end up being a part beneficiary of this. So I think I'd focus more on the CDSLs and the BSEs, but as with times going by, I think as more an F&O trading gets into focus, we might see some negative news on that front, either from the budget or from SEBI going forward. So you have to be careful about how you take this bet.
Be careful, tread with caution. That's the word coming in some of these market-related entities. In the meantime, it's really status quo, 24,195 in the Nifty futures, large chunk of the Nifty in the red, while the support is coming in from IT, from L&T and from HDFC Bank. Of course, there are lots of individual buzzers within the broader end of the market. We're going to address all of those after this very quick break.
Right. So a bit of a profit taking, not a whole lot, but one area which I want to talk to you, Deepak, about is the IMFL space. You have a lot of them in your backyard. In fact, one of them we were speaking with this morning, and the Karnataka-based Amrut Distilleries was there on our show earlier, and you may want to pay them a visit in the near term because they are planning to hit the D Street as well. We'll play a small message from them earlier where they confirm that in the next 1 or 2 years they are planning to go public. But we have taken a look at the EBITDA versus MCAP, and Allied Blender, which has got listed today, is the least one out of them. United Spirits, well, it's the industry leader, deserves a premium at 45 times, breweries 49, Allied Blenders at 25 times. Have you looked at this space? Anything which you like there? Would you like to own, Deepak?
We own United Spirits. I think the idea of here is in some way the premiumization that they themselves are doing, and we think that India as a consumer is going to do because there is a demand for more premium liquor. So while it was McDowell that was driving most of the profits, perhaps, or most of the revenues earlier, their ROCE now has consistently improved as they've premiumized. And I think that progress is going to be ongoing for the next few years. So while it trades at a very high multiple today, I think in the future, as they establish more of their larger brands, I think we will see much more action from the revenue and profit front in terms and margin front as well. So in that context, Amrut is interesting because it's very high margin, it's very high premium, it's single malts, which is even more premium than what United Spirits does for the most part. But I think I'm not sure about the rest. For instance, Radico may not be in that level of premiumization. So I like United Spirits, but not the rest of this pack right now.
At the moment, it's a closely held family concern. And of course, there's a lot of interest in Amrut itself. The family board is yet to take a call on whether we should go public. But having said that, I think we might have to bite that bullet and probably in the foreseeable future, probably within a year or two, I think we should keep our options open in going public in the street, please. Yeah.
Right. Kunal, you as well have been liking some of these liquor names, right? I mean, we've talked about Radico as well as USL in the past. What is it that can be bought afresh? And should one even venture into a fresh trade now?
So I think the only stock which I today saw as a breakout is GM Breweries. I think that's a chart which is, of course, it's higher by 10-15% or more on intraday basis. But then when you look at this as a congestion breakout, it looks like that the stock is coming out of a major multi-month consolidation, and this may not be a terminal move, but this could probably be a starting move for the stock in terms of a near-term to medium-term trend for itself. So I think at 755 level, which is the breakout point, we keep the stop loss maybe a 5% lower from those levels. So 725 approximately could be kept as a stop loss for the trade, and I think on the upside we could be looking at a 150-point breakout from the 750 levels, which should take the stock higher to almost 885 to 900 odd zone.
Okay. Naresh, wanted your take regarding some of these paper companies, JK Paper, Andhra Paper, Shenoy Paper. A lot of these names actually perking up quite a bit. We'll play the bite of the management of Quantum Papers as well, because he did confirm to us that these companies have managed to take price hike of anywhere between 2,000 to 3,000 rupees per ton, and some more might be on the anvil given the fact that overall raw material price has gone up. But they're quite confident of an uptick on the volume and the margin bit as well. We'll play that soundbite, but before that, Naresh, a view on some of these paper companies?
So the largest of them, JK Paper, has been breaking out for the last many weeks. So we've seen that finally the same momentum has come into the rest of the names. Out of the current breakouts today, Shenoy Paper still looks interesting because it's just close to the recent 52-week highs breaking out. The second largest paper, which generally has a good trend, is West Coast Paper, which has also broken out. So this could be the choices in the segment. JK Paper seems to be overdone in the short term, but a basket of West Coast Paper and Shenoy would be a good trade in the short term.
Certainly have been price hikes in the last 2-3 months. I allude to the fact that we have increased 3,000 to 5,000 rupees per ton on our paper prices in these 2-3 months. I think going forward, this is a trend which is going to continue. There is clearly a positive and uptick in the demand and pricing situation. So the industry is going to take advantage of that and see price hikes coming in future.
Deepak, what's the take on IT? I mean, yeah, stocks have already moved up a fair lot in just the last 1 week, or for that matter, the Nifty IT index is up nearly about double digits in the last 1 month or so as well. But brokerages are now believing that growth could be bottoming out in the, in the second half of the fiscal. What's your own sense?
Aisha, I think IT, I mean, we have some investments here, but I think it's going to be a little frustrating for the rest of the year. I don't think you're going to get a lot more clarity unless it is fairly clear who wins, say, the American elections. Most of the business happens to come from the US. The European and Japanese markets are probably going to remain low for a while. while they sort out their interest rate issues with and their debt issues. So the growth story of the world, which is really America at this point, that's running through a bit of a. I mean, it's going to run through a bit of a slowdown at least for the rest of the year until we get more clarity. So I don't expect something major to happen. I don't see any major spending increases. I don't see the pressure on projects coming down meaningfully after maybe technologies like AI, but also the over hiring of the past. There's a bit of an overhang of both of these things that sit on the IT growth trajectory that will slow it down. I don't think we'll see much more before the end of the year, but happy to wait. We're in result season coming soon. Hopefully, we'll be surprised from what they have to say. But I'm not going to hold my breath till December.
Fair enough, but IT hiring for now has dipped into the red again, and that's negative news for InfoEdge. We have been running those JobsPeak index data that came yesterday, because overall there has been a dip of 8% in terms of hiring, not only on a year-on-year basis, but even a month-on-month. And overall, we have seen that IT hiring, after a couple of months of green tick, has actually moved into the red, and that's the reason InfoEdge today, and you should pull up the daily chart price, that is showing a downtick of almost 2 to 3%. But shifting focus to what's been happening to that entire Hindenburg saga, Deepak, do you think there's anything to be concerned about for the investors of the Adani Group or even Kotak Group for that matter?
So Kotak is clearly, I mean, I don't know what to say. If they were anything, they were probably a broker. A broker cannot determine what his customers will buy or sell. So I don't think they are in meaningful. And they have put out clarification saying they didn't know this group was involved in the first place. And perhaps, I don't even know if they did. Could they refuse business from a group just because it was Hindenburg? I'm not sure of the answer of that. But does this reflect poorly on Adani? I mean, SEBI seems to have, at least from their view, said that there's nothing wrong with, we don't see anything wrong with what they've done. Some of the allegations in the Hindenburg report are like a little bit too, flowery in terms of language. They're intended to influence more than inform. There is a lot of, unnecessary, speculation inside of that report as well. So we look at it, trying to look at it from a fact basis. There's very little in there that is meaningful enough for us to say that there's something wrong, even if we looked at it. But the people that did look at it said there seems to be nothing wrong, and then you can't make those assumptions that just because a guy named Hindenburg. I mean, there was one Hindenburg that was a disaster. So I don't know whether this one's going to be as bad, but I don't think I'd say I'll trust a Hindenburg report over a lot of other regulatory body activity over here. So I don't, we don't consider it a cause of concern. We don't have many investments in the Adani group of companies anyways, so not much skin in the game here. But I mean, on the face of it, doesn't seem like a big deal.
So that is about the Hindenburg saga, which is playing out. Let's talk about some other stocks. These today Fusion Microfinance actually last evening called out 25% kind of growth for the new year, and this, I'm sure they've taken into account what's happening in the sector, which has got marred with a bit of if the government actually tilts, or state governments, several of the state governments are also tilting towards the rural and urban kind of a divide, the rich poor divide, and they are tilting in favor of the rural population, giving them waivers of all kinds. And this is the lender fraternity which actually is most active and has the highest amount of exposure there. This risk is coming to fore, and still they are giving 25% kind of a growth guidance. Do you think this entire MFI space can meet this kind of high growth guidance from here on, or these estimates are at risk? Deepak?
Sorry, I can't, I missed the name of that company.
Fusion Microfinance is one, but the entire sector, mostly be it Credit Grameen or many others, is a very high growth category for so far.
Yeah, I think my view here is that one of the reasons why you got a little bit of spooking in the microfinance space is actually because of whatever has happened in perhaps Telangana, where there's been a loan waiver. There's been talk of more loan waivers from other assembly, perhaps future elections as well. And, the writing is on the wall. If you're going to get loan waivers, you should stop paying your loans now, because eventually they will only give a loan waiver to someone who is in default. So if you actually do pay back your loans, then your loan waiver is not actually going to help you, right? So you're going to start defaulting now in anticipation that eventually you'll get a loan waiver whenever your turn for elections comes. So it hurts microfinance the most, because a lot of the rural areas, the microfinance territory, if you may, has a lot of the farming community who may not be able to make a differentiation between a farm loan that is getting a waiver versus a microfinance loan which does not get waivers. So perhaps that plays down a little bit on the sector overall. But you'll find that a lot of the microfinance players now have both urban and rural participation. Some of them are able to diversify across the landscape and then therefore reduce their farm level microfinance lending, which therefore reduces the impact a little bit. So maybe there's some pockets which are more impacted, some pockets which are less. We're just avoiding the whole sector at this point, because we're like, wait till, you don't want, to pay high valuations. You'd rather buy these sectors at very, very low valuations. And I don't think we're there yet.
Deepak, always good to have you on the show. Thanks for taking the time out and joining in. That's the word on MFIs, a clear avoid right now. But let's take...
If you like this video, then like, share and subscribe to ET Now.